Good morning, everyone, and welcome to the European crossover webinar.
In energy news, Austria says that, Kremlin says that Russia and Ukraine are exchanging.
I'm going to turn down like squawk. But let's see what kind of a day it is. I mean, it's been slow all week long. Bear with me. And we are seeing the euro quiet again, and the dollar index. Can't say a whole lot either in regards to that. We've been pressing up against, since last week, the 98.41, which I consider minor resistance because the real key resistance is 98.65. Daily close above that, and off to the races we go with the bulls in total control. But we've stalled at that 98.41. We fell back. We've come back again. We haven't been able to get past it. Inversely with the euro, we've been hanging around this it's somewhat more dire. I mean, we're right up against it, unlike the dollar index, which is, the key level would be to get above 98.65 on a daily close. Right now with the euro, we get a daily close above 10.05, and that's pretty much it right there. I mean, you can see right there, you see there, we get past that, that's it. I mean, you closed at the lowest close as far as a closing price, and although we are at the end of the week, so maybe they may be able to discount that a bit, but still, nonetheless, it's going to be bad news if we close below 10.05. And it certainly looks like they're heading that way. Cable, which, at the beginning of the week looked like the end of last week and for the beginning of this week looked like it was open to moving lower. We got, jumping prices in regards to Boris Johnson's comments, also thoughts about Brexit. But we've since fizzled from there, although we're still holding above where we're Friday, but we're not that far away from it either. Dollar CAD is easing back just a bit, but still retaining its bid overall. And Aussie dollar will, that's just dead in the water. That's dead money. Dollar yen continues to remain stronger here. We are at our best levels overall. I mean, best levels in the sense that we're not only there, but we're holding. But I mean, as I've said, relentlessly. I mean, and you look at where equities are. S&P is another new all-time high. This dollar yen should be easily at 11.25, easily, if not even higher. So it does say something about why it's not there. And certainly would expect that to be rather susceptible if we do get a turnaround, or to sound a little bit sarcastic, if we ever get a turnaround in S&Ps. That being said, as I mentioned before, when we dipped down sub 3,100 last week, really bit of a surprise to see the dollar yen not go sub 108. So dollar peso, we did make it up to that 1956 area yesterday, and we got a little bit above it, but we fell back a little bit. One and taking a real quick look over here with the cross rates. Like I said, FX has been quiet all week long across the board. Not really expecting to see anything, although look at the Euro Kiwi. We are moving lower here. Look at that. We've been sitting there for a while. We kind of started to turn a few days back, and it's been continuing to weaken here. So that's rather interesting. We'll obviously take a closer look there. And then with the guppy, wow, we are still hanging right here around this 140. Just can't let go of that whatsoever. And Aussie yen pretty much just dead money right here. Euro yen, still a very, very tight range. Some minor movement in Euro Aussie. We're going to move into the other markets, and you can see it with this S&Ps is just up and away. I mean, it's just another new all-time high. Although it's grinding, like Blake said in the face, it's grinding higher. Gold is just kind of sitting here. We'd already taken that dip before, and we're just kind of sitting here relatively quiet. I mean, the only thing you can kind of say somewhat is that we could be lower in gold, and I mean, considering that we're at all-time highs in S&Ps, and gold doesn't want to move any lower. And we have actually tested, look at this, on a very short-term basis. Look here, we've come down here, tested to try and break to lows, and we've held above here. So I guess something that if someone was bullish could hang their hat on. Crude oil is still standing here on the bid, but if we look where equities went, that way crude had been responding, not last week, but the prior 2 weeks before then, where it was, up and down, and it sort of has the excuse to get above 59. It doesn't want to. We'll go and take a look here at the economic calendar. Bear with me. So we did get Italian manufacturing business confidence. That came in at 98.9. They were looking for 99.8. So bit of a disappointment there. And consumer confidence out of Italy came in. They were looking for 111.7, and they came in at 108.5. So a tad bit weaker here. Coming into the States, we'll have Mexican trade balance at 7 a.m. Eastern, and then we do have durable goods, as well as initial jobless claims. So that'll be a day early. Initial jobless claims and personal income and spending. Durable goods comes in at 8:30 Eastern. Personal income and spending is going to come in at 10 a.m. Eastern. Or just personal income. Let me see. PCE index is going to come in at 10 a.m. Eastern, and pending home sales are at 10 a.m. Eastern also. Well, that'll be what's on the docket. Once again, durable goods 7:30 a.m. Eastern. With jobless claims, personal income comes in at 10 a.m. Eastern. With core PCE and pending home sales. One thing I do want to note is that I think you can't not recognize, especially when you look at the lack of volatility we've experienced. That being said, tomorrow's Thanksgiving Day here in the States, so there will not be a webinar on tomorrow, nor is there going to be one scheduled for Friday either. Just so that we're all aware of, it's been so dead anyway, but once again, we will not have a webinar on European crossover webinar tomorrow, nor on Friday. Probably expecting it to be very, very quiet, but that's something that, and I'm not going to make any comments on the other webinars, but once again, they may make a comment in regards to, I think they're looking at something similar for tomorrow and Friday, but we shall see. Let's go on and move into the news. So trade hopes lift the dollar, rate cut forecast hobbles the Aussie. The dollar posted modest gains on Wednesday as traders looked ahead to a possible outcome to drawn-out U.S.-China trade talks, while a forecast for monetary policy easily knocked the Aussie. Against the yen, the dollar traded at 109.12 off a two-week high of 9.20 hit on Tuesday. The greenback had found support on signs Washington and Beijing were moving closer to sign a deal to end their 16-month trade spat. The U.S. currency rose slightly against the euro and the pound. The Aussie dollar fell to 67.74. Trade is slowing ahead of the Thanksgiving Day holiday on Thursday in the U.S. The market is tired of playing headline ping pong with respect to trades at ready to trail. The equity market still seems to want to push on and believe optimistically that a trade deal is going to be done. But I think the FX market and the bond market have given up playing the game. Yeah, you kind of wonder when equities will. President Trump said overnight that Washington was in the final throes of a work on a deal to defuse the trade war after top negotiators from the two countries spoke by telephone on Tuesday. But he also underscored Washington's support for protesters in Hong Kong, a potential sore point with China. Judging from Trump's comments, agreement will have to wait till at least until the weekend, said Kyosuke Suzuki. If both sides cannot reach an agreement soon, the next most important day to watch is December 15th, when Washington is scheduled to impose even more tariffs on Chinese goods. The tit-for-tat protectionism has already harmed the global economy and hit manufacturing hard. Profits out of China's industrial firms shrank at their fastest pace in 8 months in October, official data showed on Wednesday, underscoring slow momentum in the world's second largest economy. China's yuan was steady since the weakness is also strengthens the case for a deeper monetary easing. It is traded at 792 to the greenback. In Australia, a forecast from Westpac chief economist Bill Evans said he expected 2 central bank interest rate cuts and quantitative easing to be introduced next year, and sent the Aussie 15 ticks lower, which just goes to show you how tight this is. I mean, can you imagine to even note that? I mean, something big like that, somewhat, and then, it said it 15 ticks lower. I mean, Reserve Bank of Australia's Governor Philip Lowe said on Tuesday he did not expect to have to use QE, but that it will become an option if interest rates fell to a quarter from 3/4%. That is a clear signal to us that the RBA will prepare to cut rates to the cash rate down to 1/4, said Evans. With that, we're going to go and move on to the analysis. Well, I'm looking here at the end, and let me pull up the bias chart. There's not going to be any changes here in the yen. The euro. Support's going to remain at 991. The key is we'll actually put 991/57, and here's the reason why: is because if we do get a daily close below 1005, the door is open for us to challenge 896, with the first potential stopping point or pause point at 957. So we actually will go with 991/57. And you know what? There just hasn't been any change. I mean, as slow as FX has been, this week has just been absolutely historical, and that's not even using hyperbole. It actually has been. I mean, we are just simply not even moving. Like I said, it's unfortunate. I mean, I come on here and, other than to say, here's a resistance, here's a support. But, I mean, what are we going to do? There's simply no movement. You know what I mean? So can't say, oh, well, if you look at a flag or whatever on a 3-minute chart, we may move. I mean, that's about what it would take, because there's simply no movement here. So, I mean, it's not only has FX been slow, but this week has been absolutely abysmal. And like I said, there's simply no movement. I mean, there's nothing you can even say, okay, well, we move to this level, and if we're just dead in the freaking water. So that remains the same, and there's nothing to change other than to say, well, if we close below 1005, that will open the door for potentially a move down to 896 with a deposit 957. That's about to the extent that we can go. Resistance on the upside is going to remain the same, because I mentioned, we can make a run up here, which the resistance is going to be 1052, and it simply doesn't mean anything. That's just where it's going to step in. We talked about this yesterday. It was on the daily roundup. I don't remember, but we would think it was here, but we would actually have to move above 1252 to get this market. Not 1252. That's what. Actually, it is 1252 we'd have to get, but we'd have to, at least on the initial run, we'd have to go on and get beyond 111 here. just to say, because anything up here right now, they'd immediately probably sell it off. So if you can get a daily close above 111, then we can start to see how much further they can push higher. But really, the market is going to be viewing that as a selling opportunity unless we could get down to, unless we can close above 1252. Okie dokie. Hang on. Let's go move into cable. Cable stayed in a tight range on Tuesday. Resistance remains the same at 29.23, although support comes in at 28.09. So we're opening the door for this to potentially get a little bit lower. So once again, support will be 28.09. And, as I mentioned earlier, when you look where cable had closed last Friday, the door was open for us to, go and move lower. And you can see here. And then we turn around and obviously the comments over the weekend from Boris Johnson talk about Brexit got us moving higher to challenge back up here again. I apologize. And obviously this was Fridays. And then we started to come back up in here. And look like they may be able to try and push this a little bit further, but they stalled yesterday and kind of worked lower, and now it kind of pressed a little bit. So, well, not that much as far as pressing, but we have moved the support down to 28.09. Resistance will remain the same at 29.23. Now let's go move into the Aussie dollar. Well, sound like a broken record, but I mean, the charts tell it right all there. I mean, we're just simply not even moving. I mean, they were even talking about with, when we read the story, which was kind of rather humorous, they mentioned about the Aussie and it mentions about the potential for QE and how it moved at 15 ticks. I mean, it's hilarious. We're just simply not moving here. But there's no changes here for the Aussie. So on the downside, it's going to be 67.48. Upside is going to be 68.16. We'll go moving to the Kiwi. So it says the Kiwi maintains its bid with 64.38, 64.36 is immediate resistance with major level 64.93 beyond that. Support is going to be 63.58. So you can see here where, back. I mean, we have maintained the bid, although in a very, very quiet market. And you can see 64.36 is coming up right here. Although this is where more significant major resistance comes in at 64.93 right here. But right now, 64.36, and we're not, I mean, we're at least keeping a bid, but it's just very quiet markets here. 64.36, and we're going to keep the low at 63.58. That actually picks up the low just a bit. We had 63.46 before, so it's moving it up to 63.58. Actually, I have it now at 64.36. I guess, you know what, we'll just go and keep that. The resistance we had it higher. We actually moved down to 36, see if they trigger that there. And let's go move on to the dollar CAD. Says the dollar CAD has paired back from a short-term double top at 33.36. Support is 32.28 with resistance at 33.06. So we've made a tag back in here. Remember, we had that resistance at 33.36. Looked like they may try and take a step on that, but they have not been able to do that, and hence kind of formed a little bit of a double top on a very short-term basis, and we're open to moving lower here at this point. Support's is coming up now, or going to be for today, 32.28. But resistance will remain the same, 33.36. So the dollar peso stretched the upper limit, getting past the prior high of 1956, but coming up short of 1962, which will be Wednesday's resistance. Support will be 1942. So, we got past, and I'll show you the 19. Let's go and take a look here on the 2-hour chart. We actually have a market that's moving. So here comes 1962 coming in right here. We got past the 1956, got past those highs, and came up past 1956, but falling up short a little bit of 1962, which we're going to use as our bias chart resistance, although we are kind of pairing back here, and support's going to be 1942 day. This is actually a market that's actually moving. And nobody's really talking about it or even trading it, I've noticed. I guess it's the boy that cried wolf. I mean, people got so tired of the peso not going anywhere that now that it's starting to move, nobody cares. But it's the one pair that's actually exhibiting some movement here. Now looking here at the dollar yen. The dollar yen remains bid with equities at all-time highs every day. Resistance is the pivot at 927 with 964 beyond. Support is 868. So once again, like I said, we've talked about this pivot for the longest time, and it's significant. I mean, it's kept the market in check for some time, the 927 pivot. And that's going to be resistance with 964 if we can get beyond. We'll see what happens. And we'll mark both of those down. Yeah, 868 will be the support. If we get a turn down, you know, I don't expect anything dramatic to happen at any point now. With that, we'll go and move into the cash dollar index. The dollar index retains a bid, but it's not been able to scale 98.41. Resistance remains 98.65 with support at 98 even. So there's no change here in the cash dollar index. I mean, you can see we've just been hovering up here, unable to take out 41, but the key support is 98.65. We've discussed that. If we get a daily close up of 98.65, puts bulls in full control with the initial target at 99.13. That's initial. Obviously, we go much higher. And I've said it before, is that, you know, any dips in the dollar index are going to be bought back. It's just the case. The only way you're going to get some kind of follow through, it would be, and in my eyes, a minimum of 100 tick loss in one day. A minimum of 100 tick. Anything less is just going to be bought the very next day. Not that they won't be beyond that, even with a 100 tick loss, but once again, at least it would surprise people. Wow, you know, maybe there's a real dip coming. Anything short of 100 ticks will just get bulls to step in and buy the very next morning. With that, let's go and move into the cross rates. Well, the one thing you can say about the Kiwi yen is at least it's retained its bid, and we actually are above 70 cents, which has been the resistance for a while. This range has lasted for a month, so we're actually breaking above it. So, and I don't mean that sarcastically, but props to the Kiwi yen. At least it's breaking out, although it's had more enough time to thinking of the right word, can't think of it right now, but it's not to congregate, but essentially to congregate at this level for nearly a month. So we're breaking out here. Resistance is actually going to come in now. You can see that 70.48. So resistance will be 70.48. We'll finally start to break out a little bit after a month-long consolidation. That's what I meant to say. With that, obviously, resistance, not resistance, but support will move up also correspondingly. And you can see here coming in right there by dead center. It's just going to be 69.36. 69.36. Moves up from 69 cents to 69.36. Let's go and take a look here with the euro yen. This market is dead as a freaking doornail. Oh my goodness, look at that range. Wow. An 11 tick range. I mean, if this market isn't dead, I don't know what is. 11 tick range for the entire session since yesterday's close. Needless to say, there's no changes. Downside support is 1947 with upside resistance at 2031. Now we've come up short of that 2031. We've kind of tried to tag up to that level, but I mean, wow, an 11 tick range. Unbelievable. It might be a 12 tick range, 12 pip range, but that's it. Let's go and move into the Euro Aussie. Once again, I mean, hey, you know what? I can see the majors with the China war thing, but these cross rates, I mean, that's beyond pitiful. I mean, why aren't they moving? You know what I mean? I don't get it. I really don't. No movement here in the Euro Aussie. Of course, the Euro's been dead, the Euro versus the dollar. I mean, yesterday I was saying, I remember looking on there and I think, what was it? We had a 19 pip range for 9 hours or something like that, you know, yesterday morning, and we were just not moving, and you can see it here too, still. I mean, I don't know, honestly, I don't know what's going to break the deal. Like, I really don't want to hear that it's a Chinese deal. What the hell does the Chinese deal have to do with the Euro in Australia, you know? I mean, you can make the case about the Aussie, but the Aussie hasn't even been reacting to the news with its bullish to the downside. You know what I mean? It's just dead money. And the Euro just pretty much been dead no matter what. But no changes here, obviously, in the Euro odd. 62.09 on the downside, 62.89 on the upside, and we are just simply not even moving here. Let's go and move into the Euro Kiwi. Now, we did see a little bit of downside there. We know the Kiwi's been a little bit on the firm side. You can see here, continue to move lower. Now, yesterday's support resistance level coming into yesterday was 71.31. You can see that's held, and it still continues to hold, and no changes. On the upside, we had 72.72, and no need to change that either. I mean, if we were to get a bounce back, if the euro were to start to move, I don't think that's going to happen. But nonetheless, nothing to suggest that. But 72.72 would be on the upside. But we are coming into this. We tagged it yesterday, and it held, which is 71.31. You can see the significance of that here. Let's go and move into the Aussie yen. This is plain nuts. Look how dead this market is. So a 19 pip trading range. So in 12 hours, essentially, since when markets closed in the US, we've had a 19 pip trading range. In the Aussie yen, I mean, just unbelievable. And this used to trade as a proxy for the equities, and look at it, just completely dead in the water. Needless to say, same thing. No changes. 74.49 on the upside, 73.42 on the downside. And like I said, it's only a 19 pip trading range over the last 12 hours. Or nearly 12 hours. We'll go and move into the guppy. And we're just in stone here. Or it's locked in with the magnet at this 140. And we have not been able to get beyond that at all whatsoever. Upside is going to be 40.76 with the guppy and 39.50 on the downside. And we're just simply not even moving here. Down, up, down, slightly up. Although it's faring better than some of the other sterling pairs, I'll give it that, but nothing here. And we'll finish up with the sterling odd. Up, down, up, down. Now in the middle, and we're not going anywhere. Well, it looks like since yesterday, what, 10 pip range? Holy smokes. Once again, no changes. 89.17 on the downside, 90.58 on the upside. And this market is just simply not even moving. Look at that. We'll go back to look here on the indices. Once again, new all-time highs in the S&Ps. They did tag 3150. I saw that. And we're just a little bit lower than from there. You know, when I was looking here, it wasn't even like there was big volume at that level either. Although there was at 49.50. And we got up to 31.50. Not big volume, but okay volume. And at 31.49. 31.49 to 31.50. And there we go. Yeah, there was some decent volume at 49.25 and 49.50. But still, like I said, new day, new highs in S&Ps. Gold just kind of holding here, positively diverging because new all-time highs, but we haven't moved any lower here with the gold. Crude oil, like I said, just kind of sitting here. Not a whole lot. We are on the bid, but certainly you think we'd be above 59 if it's been following, if it were to follow equities like it had before. And that's about it. Other than that, there's no changes. As I mentioned, there will not be a webinar tomorrow or on Friday. Tomorrow's Thanksgiving, and they expect even slower activity on Friday. So with that, good luck for the rest of the week. We'll see you on the FX Daily Roundup later today, and thanks for joining us here on the European Crossover.